Hello, everyone, and welcome to another Elliott Wave forecast, a charts of the day video. My name is Eric, and today we're gonna take a look at the S&P 500. The charts of the day is a session that we provide free to our followers around the world, and it's posted every single day at elliottwaveforecast.com, and you can need to visit the site elliottwaveforecast.com, scroll down, and you can see our view. For example, yesterday the charts of the day was about oil. Today is gonna be the S&P. Everybody around the world wants to know the answer, what the indices are gonna do. They're gonna go to new highs, or they're gonna crash one more time before the year end. The real answer is the following. The indices are bullish. Everybody knows that in Elliott Wave forecast, we always are and we always will be bullish, the indices. That we always say, because that's human nature. Yeah, they are corrections, and corrections are opportunities to buy in 3, 7, and 11, right? But at this stage, what the indices are showing around the world is 3 waves. And so the basis of the Elliott Wave theory is that after the correction ends, 5 waves, not 3, 5 waves going to makes a temporary trend, or is a renew or the highest degree trend. This is what 5 waves looks like in the Elliott Wave theory. 1, 2, 3, 4, and a 5. 1, 2, 3, 4, and a 5. At this stage, most of the indices are here. I'm not saying that they're going to do a double. I'm saying that most of the indices did 1, 2, 3, and now they are 1, 2, 3. And a smart trader do not guess right now. And a smart trader say, okay, I'm going to wait for my 5 waves, and I won't get caught in the wrong side of the double correction. 1, 2, 3, 4, 5, 6, 7. That's why you guys hear us saying times after time, 3, 7, and 11. At this stage, the indices are a borderline. They can do 7, or they can have a low in place. So let's see the S&P. This is the S&P on the daily chart. 1, 2, 3 to the highlighted area. This is our blue box area here in the S&P. That's the inflation area. The highest degree trend, of course, is bullish. So, saying the lows here, the S&P has done 7 swing. When we downgraded, this is the low, this is the 4 hour. 1, 2, 3, 4, 5, 6, 7. Is an ABC by definition. An ABC is 5, 3, 5. When we downgrade the S&P here, the S&P is showing in the 1 hour time frame 1 of A, 2 of B, and then from 2 is showing 1, 2, then 1, 2, 3, 4, 5 makes an extended 1, a flat in a wave 2 and blue, 3, 4, and 5. And when today's high is happening, the S&P is showing 7 swing higher. It's not 9 or 5 or 13, which is the import sequence. The S&P is showing 7. 1, 2, 3, 4, 5, 6, and 7. What we need to wait in the S&P the next few sessions, 2 things gonna happen. Either they're gonna decline and do a 4 and make a push on the 5, so you have a temporary or a huge low right here that can see the S&P looking even into the 8,000 areas, or even 9,000 from here. That's one thing that happens. The other thing is that the S&P is gonna fail here, and then the S&P is gonna renew the downside, and it's gonna see, it can even see the 4,400 area. As of right now, we've been playing with the members the Elliott Wave edging. Why? Because we've been calling the S&P higher, right? We've been calling the S&P higher. But definition times in the S&P should be happening within the next week. Within the next week, we will know if the S&P goes to 8,000 or it goes back to 4,400. Always bullish, but it is now 3 downs, 3 out. In order to have a low, we need the 4 and a 5. So that's our view in the S&P. That's the advisement that we've been telling members. Wait for the 4 and the 5 because there are indicators around the market that can put the S&P at 4,400. We are not calling that. It's some few indicators that we track. But there are indicators also that can put it higher. So we are in that fight. 3 downs, 3 out doesn't make a trend in Elliott Wave. 3 out, 3 downs, 5 outs is bullish then in the 4 hours. So the 4 hour remains sideways is the message. Wait for the 4 and the 5 is the more aggressive view. But be careful and be smart. And everybody knows me, Eric, from Elliott Wave Forecast. I'm very bullish the indices. I always got the indices right. When COVID in 2009, 2015, every decline. But I know when to push gas and I know when to stay on the side on to waiting for the data to give me the clue. This is time is to wait for the data to give you the clue. That's the message for today. If you like the video, we have a phenomenal special now in Elliott Wave Forecast. We got the trial for just 99 cents. Believe me, it's worth the trial because you're going to know where the indices are going to go the moment that the data show you the face. That's the charts of the day for today. See you guys around. Have a good day, everyone.